Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 9th of November 2019 and we're providing our gold and silver weekly update for the week ending the 8th of November. Gold fell $55 last week from $1,514 to $1,459, having hit a high of $1,514 and a low of $1,456. In sterling terms, gold finished the week at £1,148, that's down £28. And in euros, it closed at €1,323, that's down €33. Silver fell $1.32, from $18.11 to $16.79, having hit a high of $18.22 and a low of $16.70. In sterling terms, it closed at £13.15, that's down 85 pence. And in euros, it closed at 15.23 euros, that's down 0.99 euros. The gold to silver ratio rose quite sharply from 83.6 to 1 to 86.9 to 1. The Dow Jones closed on Friday at 27,681, up 6 points on the day and up 334 points on the week. And the NASDAQ closed at 8,475, up 40 points on the day and up 89 points on the week. And the S&P 500 closed at 3,093, up 7 points on the day and up 27 points on the week. All of the indices reaching at some stage at least once and often more all-time highs. Brent crude closed at $62.51, up 82 cents on the week. And WTI crude closed at $57.24, that's up $1.04 on the week. The dollar index stands at 98.35, that's up 1.11 on the week. Now this past week has been exciting in the precious metal space, and our prediction last week proved both right and wrong. Our conclusions were, quote, "We do not see this major lurch forward that many of our contemporaries predict, as frankly we can see equity markets and the US dollar, and to some extent US treasuries, still mopping up surplus investment monies, at least through November." And this proved so far right on the money. But we got it wrong, as we stated also that we expected silver to trade between $17 and $19, vacillating, and it actually fell below that $17 figure. We also stated, which was reasonably accurate, that if gold fell below $1,500, then $1,465 would be hit, and then $1,431 tested, and we are currently trading at $1,459. So, what exactly happened to push precious metal prices down? Well, first of all, the Q3 gold report from the World Gold Council showed that whilst overall demand was up, it was purely the result of ETF buying. And a considerable 50% decline in coin and bar demand was noticeable, together with an increase in supply due to recyclables. So you can see why the pumpers and their supporters are so heavily pushing gold and silver to $10,000 and $100 figures, because they're simply, those linked to bullion houses are not selling enough of the physical. It truly is as simple as that. But more importantly were a mix of reactions from the previous week's figures, including excellent non-farm payrolls, a somewhat cautious Fed statement indicating that rates were not likely to rise in December, and positive rhetoric from both China and President Trump that not only is phase one of the tariff deal likely to happen this year, but also some of the existing tariffs could very well be rolled back, and soon. We also saw a better-than-expected ISM non-manufacturing index, together with a better-than-expected consumer sentiment index, though factory orders were a little disappointing. The dollar, however, strengthened considerably, as Treasury yields rose, which frankly takes the wind out of gold as an investment, as fans search for yield or dividends. Yesterday, we also published a video as to why certain global funds tend to favor US stocks. Now, we're conscious this does not necessarily appeal to all of our listeners, but it's well worth a listen, as it highlights one additional factor which causes the Dow and US equities to rise, perhaps far more than they would normally. Now, from a technical point of view, there is short-term resistance at the 100-day moving average of 1475 and support at or around October lows of between 1426 and 1431. Short-term and medium-term momentum is negative, and the fast stochastic generated a crossover sell signal. Now, should gold break below these figures, then there is additional support at 1412. And frankly, we would not be surprised to see this tested before this month is over, and possibly, but just possibly, even next week. If gold falls, though, below 1400 and holds, then it is in a world of hurt. But we suspect, frankly, that 1400 will be quite a resilient support level. Now, when we heard the Fed chair stating that he did not expect to see rates fall further this year, and the economic news which followed it was either excellent or moderately good, certainly compared with expectations, our natural inclination, and to be frank, calculation, was to talk the price of both gold and silver down considerably. However, after speaking with traders and checking the technicals, we tempered our negativism, which, as far as gold was concerned, was the right thing to do, but not quite so for silver. For silver last week fell over 7%. A $1.32 fall is quite dramatic, though it did have a relatively good run in recent months. However, at $16.89, it is below the $17 support level, and whilst it is possible that the price correction may have been overdone on Friday, we suspect that may not be the case. We have stated over the past week or so that equities are now back in vogue. In addition, providing, and I shall repeat this, providing the China trade talks continue positively, and phase 1 is introduced and tariffs are rolled back, most of the fear demand for gold and silver will abate, and we shall see even lower prices yet again. Silver will then eventually benefit a little from a potential increase in industrial demand. But until silver actually falls below $16 and close to the $15.50 level, the fear demand will not have been fully removed. Now, naturally, if the trade talks fail or are considerably delayed or are not as beneficial as many predict, forecast, or envisage, then we shall undoubtedly see the fear trade increase further, and silver will pop back up to our mid-range target of $17.50 and possibly revisit 18. But frankly, all looks good on the negotiation front for the moment. So last week saw silver's worst performance since October 2016, and the technicals indicate support at $16.50 and resistance now just above $17.50, the 50 EMA. It's ironic that even we were not pessimistic enough for this week, but we have signalled almost every day that we may be witnessing perhaps one final bull leg, and potentially major bull leg, in equities, which will have a damaging impact on both gold and silver for investment purposes short term. And this bull leg could last quite a few months. On the positive front, however, it means for those investing for the longer term, they will have yet another opportunity to buy in at lower levels. And whilst we're not ruling out a slight recovery in gold and silver prices, we are encountering difficulties in finding reasons to justify them, at least for the next few weeks. We at least take heart from a quick perusal of those involved in this space, producing daily and weekly videos almost to a man or woman, actually talking up prices back to the levels pumpers were advocating only a couple of weeks ago. So whilst we weren't quite bearish enough as far as silver was concerned, we were certainly on the right side of the track. Now let's take a brief look at the economic data being published next week, which could have an influence. On Monday, no data, as it's Veterans Day holiday. Tuesday, a number of Fed governors are commenting. Wednesday, Consumer Price Index for October, Core CPI for October, Household Debt for Quarter 3, and Jerome Powell gives testimony to Congress, which he also does on Thursday. And also on Thursday, we have the Producer Price Index for October. Then on Friday, retail sales for October, import prices for October, industrial production figures for October, and business inventories for September. So Wednesday and Friday are worth taking note of, together with Powell's testimony, though we suspect now that we all know what that will reveal. Now we wish to end this podcast with exactly the same words we used last week, and we'll quote them here. Many have asked us if we believe that gold and silver will rise significantly and when. And a quick answer to that is yes, but when we are confident that the equity markets have run their course. We pointed out in a previous video podcast that historically much depends on whether the Fed is forced to reduce rates further from here or not. If they are, then this will begin to frighten equity markets, and whilst they like lower rates, 4 rate cuts will suggest that the economy is not in as good a shape the government and the Fed believe it to be. All of our inclinations suggest that there is still one bull leg left for equities, and when this is done, then we can expect to see some major hikes in gold and silver prices, but gold first, as money leave the stock exchanges and move towards safe haven assets, unquote. This situation still stands, though at present we may very well see gold fall into the 1300s and silver re-enter $15 before that stage is reached. Finally, a number of you may be aware, from membership of our Discord channel, that my father passed away last week. Although he was a ripe old age at 92, his heart failure occurred a little unexpectedly in that he was gardening within 5 weeks of his demise. Had he been ill for a much longer period, my mother at 85 would have perhaps been better prepared. I would very much like to take this opportunity to thank everyone who has sent condolences. They are truly appreciated. And whilst we have just about managed to produce a full stock of video podcasts, I apologise if perhaps we haven't been able to react to comments quite as promptly or as thoroughly as we normally do. Rest assured they're not being ignored, and neither have we forgotten about the signature tune competition. But please bear with us another week or so while we tend to the funeral and other arrangements. But we shall still aim to put out a video podcast each day. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press that bell sign. And we have listed below the important videos that we feel we have produced and should perhaps be taken note of over the past couple of weeks. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.